Welcome back, investors, to Ticker Time News. I'm Adam, and Palantir Technologies, ticker symbol PLTR, is getting hit hard by sellers after the company missed earnings expectations just slightly in Q4. Its revenues did beat estimates, and its Q1 22 sales guidance was also above estimates, but those were just not enough to garner investor enthusiasm, especially when Palantir trades at an eye-popping 62 times forward earnings. The software-based company, which provides data analytics tools for governments and private organizations, has been stuck in a long downward trend. After shares initially skyrocketed over 400% about 4 months after the company's September 2020 DPO, they have since cooled off significantly, falling back down towards their IPO price of $10 a share. In fact, as of the day before their earnings, Palantir stock had dropped over 24% since the start of the year. So, why has the stock been unable to get back on its feet, even after the company presented solid revenue growth and upbeat guidance for Q4? Okay, before I answer that, smash the like button, share this video, and click the first link in the description to get our top 10 stocks list and so much more. And if it's your first time watching, click subscribe. Thank you, my friends, for doing that. One reason that investors have shied away from the stock is its high multiple. Before today's earnings report, Palantir traded close to 70 times forward earnings. The company expects to grow revenues at about 30% or more through 2025. So we can game plan that out to see what it would look like, which may just not be enough to justify its valuation, particularly if that growth is coupled with EPS misses. Also, government revenue growth, which typically makes up over half of total sales, continued to decline in Q4, rising just 26% year over year, a considerable slowdown from the 76% growth in Q1 21, 66% in Q2 21, and 34% in Q3 21. That's a steep decline there. Investors, they were also worried that the arrival of a new administration combined with the US pulling out of Afghanistan could soften government revenues going forward. It was talked about a lot last quarter. So the mild government revenue growth may be adding to the selling pressure. Aside from those rough patches, Palantir still delivered a few notable highlights. For one, as a software company, Palantir boasts impressive gross margins. The figure expanded by over 480 basis points year over year in Q4 to 82.9%. That is incredible. Also, commercial revenues jumped 47% year over year, an acceleration from the 37% increase last quarter. Moreover, U.S. commercial revenue soared 132%. The strong commercial growth is an encouraging signal that perhaps Palantir's software tools are becoming a critical component of private companies' businesses. However, Palantir's highlights come up short in the wake of a high multiple, though, slowing government revenue growth and a Q4 earnings miss. Palantir's secrecy, due to its CIA ties, doesn't help out either. If you were to ask around, maybe a table of 20 or 15 people, how many investors can actually tell you what Palantir does? Not many. Without the company fully explaining each aspect of its business, investors may overreact to slight earnings misses and mild results and cause a big decline like we see today of over 15%. Bottom line, I do caution investors who want to jump in to wait on the sidelines, as this high multiple could trigger additional selling going forward. I do think that Palantir may be hitting a bottom, though, somewhere around $9 a share. I also believe that Palantir is a good company to keep on your radar, as the global digital transformation bodes very well for the company in the future. Also, Palantir is within a few quarters of becoming profitable if it continues to flatten out its cost like it did in this quarter. Well, that's what I think about Palantir's earnings right now. But I want to hear from you. What do you think about Palantir's slowing government growth? Will it become a problem? And remember, your comments make these videos so much better. Smash that like button, share this video, and click the first link in the description to get our top 10 stocks list and so much more. We've done the research so you don't have to. And if it's your first time watching, click subscribe. Thank you so very much for watching, and I will see you in the next video.